Every day, billions of dollars flow across borders, settling trades, fueling investments, and acting as the bedrock of global finance. For decades, the US dollar has been the undisputed king, the world's global reserve currency. But what if this reign is quietly coming to an end? From international trade to central bank reserves, the dollar's influence is pervasive. But recent geopolitical shifts, economic tensions, and a concerted push by several nations are fueling a movement known as de-dollarization. Is this a temporary tremor or a sign of a seismic shift in global power? To understand where we're headed, we must first look back. The dollar's ascent to global dominance wasn't an accident. It was forged in the aftermath of two world wars and cemented by the historic Bretton Woods Agreement in 1944. At Bretton Woods, 44 nations agreed to peg their currencies to the US dollar, which itself was convertible to gold at a fixed rate. This effectively established the dollar as the primary intervention and reserve currency, a testament to America's economic might post-Yuan default. This exorbitant privilege, as it was famously called, allowed the US to borrow more cheaply, print more money, and wield significant geopolitical influence through financial sanctions. For decades, the system remained largely unchallenged. Even the Nixon shock of 1971, which ended the dollar's convertibility to gold, couldn't dethrone it. The dollar simply transitioned to a free-floating currency, its dominance sustained by the sheer size and liquidity of US financial markets and its role as a safe haven asset during crises. Today, the dollar still accounts for around 60% of global foreign exchange reserves and is involved in a staggering 88% of all over-the-counter FX transactions. Major commodities, especially oil, are primarily bought and sold in US dollars. However, the landscape is shifting. Recent years have seen an acceleration of de-dollarization efforts, primarily driven by geopolitical tensions and a desire for financial independence. The weaponization of the dollar through sanctions, particularly against Russia, has served as a wake-up call for many nations. The BRICS bloc, Brazil, Russia, India, China, and South Africa, now expanded to include other significant economies, is at the forefront of this movement. They are actively exploring a shared currency and increasing bilateral trade settlements in local currencies. Russia and China now conduct nearly 90% of their trade in yuan and rubles. India is increasingly trading oil with Russia in rupees. These moves directly reduce the need for dollar reserves and circumvent the SWIFT system, lessening vulnerability to US financial leverage. China's ambitious push to internationalize the renminbi, or yuan, through initiatives like the digital yuan and global clearing centers, represents another significant challenge. While its share in global reserves is still modest, its transactional use is growing. Other potential alternatives exist. The euro remains the second most used reserve currency. Gold is also seeing increased demand from central banks looking to diversify away from fiat currencies. However, these alternatives face their own hurdles. The euro lacks a unified bond market and common treasury. The yuan's full potential is hampered by China's capital controls and a less transparent legal system. A genuine BRICS currency is still years away due to structural challenges. So, what does this mean for the future? A sudden collapse of the dollar's dominance is highly unlikely. Its deep, liquid financial markets, strong institutions, and the sheer inertia of decades of use are formidable barriers. Instead, we are likely witnessing a gradual, structural shift towards a more multipolar monetary system. Regional currency blocs may emerge, and the dollar's share, while still dominant, could slowly diminish over decades, not years. For the US, a diminished dollar role could mean higher borrowing costs and less leverage in foreign policy. For other nations, it offers greater financial autonomy and reduced exposure to US economic policy shifts. But it also brings increased currency volatility and complexity. The dollar's future is a story unfolding in real time. What are your thoughts on de-dollarization and the rise of alternative currencies? Share your perspective in the comments below. And don't forget to like this video and subscribe for more in-depth analyses of the global economy.